Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the hidden stories within financial filings, and spoiler alert, we've got a doozy today that might make you scratch your head. If you appreciate getting straight insights from corporate documents without the jargon, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down these reports even further. Today we are diving into a Form 8K filing from Bright Mountain Media Incorporated. Now, what is an 8K? Think of it as an urgent news bulletin for public companies. It is filed when something significant happens that investors need to know about right away. And for Bright Mountain Media, this filing is all about some major changes to their debt. Bright Mountain Media Incorporated, for those not keeping tabs, is a company involved in media and advertising. Now, the big news here revolves around a credit agreement they have with Centerlane Partners. This agreement is their lifeline for funding, and it seems like they've had to make some adjustments to it. The company and its subsidiaries have entered into what they call the 24th Amendment to their Senior Secured Credit Agreement. That is a mouthful, right? Basically, it means they've tweaked the terms of their existing loan agreement for the 24th time. This signals that things might not be going exactly as planned, and they are in constant negotiation with their lenders. So, what exactly did they change? Two main things. First, they adjusted how they pay back a specific type of loan called second out loans. The payment that was due on the 31st of December 2025 was completely pushed back to the 31st of March 2026. This means they are struggling to make their scheduled debt payments. Second, they also deferred the interest payment for these same second out loans that was due on the 31st of December 2025. That interest payment is also now due on the 31st of March 2026. So both the principal and the interest payments for these loans have been postponed. These deferred payments add up to a significant amount, about $600,000. This is not a trivial sum for a company, and indicates they needed this breathing room from their lenders. It tells us that incoming cash flow might not be as strong as anticipated to cover these obligations. Now, here's where it gets really interesting from an investor's perspective. To get these payment holidays, the company had to give their lender, Centerlane Partners, something in return. And what did they give them? A chunk of stock. They issued 28,70792 shares of common stock, which is about 1.5% of the company's total ownership. This means the lenders are now becoming a much bigger owner of the company. After this stock issuance, Centerlane Partners and its associated entities now own a substantial 26.4% of Bright Mountain Media's stock. This is a huge stake. It means the lenders are not just creditors anymore. They are now a very significant shareholder with a vested interest in the company's survival beyond just getting their money back. They have considerable influence. Looking ahead, the pressure is mounting. By the 31st of March 2026, roughly $2.2 million will be due under this credit agreement. And then the big one, the maturity date of the entire credit agreement is the 20th of December 2026, when a staggering $90.5 million will be due. This is a massive amount of money for a company of this size. And the fact that they are deferring payments now raises serious questions about their ability to meet these larger future obligations. Now, let's put on our investor hats and analyze what this all means. Bright Mountain Media is clearly in a tight spot financially. Deferring debt payments, especially interest, is a red flag that suggests their current cash flow is not sufficient to meet their obligations. This often happens when a company's revenue streams are underperforming, or if their expenses are too high. The fact that they had to give up nearly 1.5% of their company to get this deferral shows they were in a tough negotiating position. Centerlane Partners, by increasing their stake to over 26%, now has a significant say in how this company is run. This could mean more pressure for cost-cutting, strategic shifts, or even a potential takeover if things don't improve. The looming deadlines in 2026 for over $90 million are a serious concern. If the company cannot turn its financial performance around, it's highly unlikely they will be able to refinance or pay off this debt, which could lead to bankruptcy or a distressed sale. We need to watch their revenue growth and profitability very closely in the coming quarters. My assessment is that Bright Mountain Media is facing significant financial headwinds. Their ability to generate sufficient cash flow to meet upcoming debt obligations is their primary challenge. The increased ownership by their lender, Centerlane Partners, adds another layer of complexity and potential risk for existing shareholders, as the lender's interests may not always align with theirs. Alright? That is our breakdown of Bright Mountain Media's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.